Markets just hit new highs, yet uncertainty is still dominating the headlines. So here's the real question investors are asking. Which one should you trust? Hi, I'm Eric Petway, Chief Investment Officer Group at Journey Advisory Group, and welcome to CIO Corner. In the next few minutes, I'll break down what really moved markets last week, what the data is telling us right now, and why long-term investors should stay focused, even when headlines change by the hour. Let's start with the numbers. Last week was a strong one for U.S. equities. The S&P 500 rose 4.5%, and the NASDAQ 100 climbed 6.2%. Markets are now sitting at all-time highs, with the S&P 500 up 4.4% so far in 2026. International markets lagged last week. Even so, they're still ahead of U.S. equities for the year. So underneath the noise, performance has remained broad. At the same time, global developments added volatility, and that showed up quickly in markets. On Friday, Iran announced the Strait of Hormuz was reopened and that uranium enrichment would be permanently stopped. One day later, that decision was reversed. The strait was reportedly closed again, and enrichment efforts would continue. On Sunday, the United States announced that negotiations with Iran are scheduled to resume on Tuesday. Markets don't react to headlines, they react to expectations. Right now, investors are looking for stability and resolution, and sustaining these record market levels will require clearer direction on this front. That brings us to earnings, one of the biggest reasons markets have been resilient. The first week of first quarter earnings reports for the S&P 500 are in, and the results are coming in better than forecast. Expectations are building for a strong earnings growth quarter, and that strength has provided an important foundation beneath equity prices. Now let's move to our chart of the week. This chart puts recent volatility into perspective. The S&P 500 is once again positive for the year after briefly dipping into negative territory in March. That rebound is encouraging, but it's also a reminder of how quickly sentiment can shift. This is exactly why maintaining a long-term perspective matters, especially during periods of heightened uncertainty. Improving sentiment around the Middle East has been a key factor behind the S&P 500 pushing to a new all-time high, surpassing its previous January peak. Investors are hopeful that greater regional stability could allow oil shipments through the Strait of Hormuz to resume easing pressure in the energy markets. While recent statements suggest shipping could restart, uncertainty remains. And we've seen that uncertainty play out clearly in recent weeks. Over the past 6 weeks, markets have moved sharply in both directions. Oil prices briefly rose above $100 per barrel before retreating back to the $80 to $90 range. A ceasefire that failed to produce a lasting agreement added to volatility, but expectations are growing that discussions could resume in the coming weeks. Significant challenges remain, particularly around Iran's nuclear program. Despite that, markets have rebounded quickly, and here's why. The fundamentals remain strong. Corporate earnings are doing much of the heavy lifting. Year-over-year, S&P 500 earnings per share growth is currently running about 15%, nearly double the long-term historical average of 7.7%. Valuations have risen as markets rebounded, and the S&P 500 PE ratio is back above 20 times earnings. But valuations remain below levels seen in recent years. We're also seeing early signs of inflationary pressure linked to higher oil prices than the latest consumer price index report. So far, those increases have not spread broadly across the economy, and historically, when energy prices stabilize, inflationary pressures tend to ease as conditions normalize. Another important takeaway this year has been diversification. Many different asset classes have contributed positively to portfolios in 2026. Within the stock market, leadership has come from a range of sectors, including energy, materials, industrials, and others. In fact, 8 of the 11 sectors in the S&P 500 are positive year to date, despite ongoing market volatility. The chart being shown highlights year-to-date asset class performance and illustrates how returns this year have been supported by areas outside of U.S. large-cap stocks. The balance has been essentially valuable during periods of uncertainty. While global developments continue to evolve, the core principles of investing remain unchanged. A long-term perspective and a diversified approach remain among the most reliable ways to navigate short-term uncertainty and build wealth over time. Even when headlines are noisy, markets ultimately follow earnings and fundamentals. We hope CIO Corner and the chart of the week are helpful as markets digest rapidly changing information. If this was helpful, be sure to subscribe for future market updates and follow Journey Advisory Group on LinkedIn or your favorite social platform. And if you have questions or would like to review your portfolio, your JAG team is here to help you stay aligned with your goals. As always, remain calm, stay focused, and most importantly, stay the course.